You're ready to start investing, but you don't know where to start? This is your complete beginner's guide to investing. So level 1 of investing is your 401k. This is your bare minimum of investing. If your company offers a 401k match, that is absolutely where you should start investing. Essentially, your employer saying, if you contribute this amount, we will match that amount. It is a 100% return on your investment. There is no other investment vehicle on the market that is going to give you that type of return. You can see here my 401k plan. This is a screenshot of my personal 401k. My company had a 6% match. But I contributed 6%, so my company contributed 6%. Important things to note about your 401k is your vesting schedule. If you work in big tech, it's very common to be fully vested day one of employment. However, a lot of legacy companies will have a tiered vesting schedule across multiple years. So essentially, if you have, let's say, a 4-year vesting schedule, there'll be year 1, 25% of the company's contribution is yours to keep. At year 2, 50%, and so on and so forth. Now, what you contribute to your 401k is always going to be fully vested. So that means the money that you put in will be yours from day one, but the money that the company puts in will oftentimes be vested on a different schedule. So just something to be aware of. Now, let's say you're already participating in your company's 401k and you're ready for what I call level 2 of investing. Level 2 is where you'll start building real flexibility with your money. There are a lot of rules with the 401k about when you can take it out. You have to be, I think it's 65 and a half. Eventually you'll get there, but if you are somebody who wants to retire early, you need to have some other options. Level 2 is where you start building some real flexibility with your money. This is investing outside of your 401k, outside of what your work offers you. This can be something like a brokerage account or a Roth IRA. Now, Roth has some income rules that you should be aware of. There are some ways around it that get a little bit more complicated, like a backdoor Roth. There is also a maximum amount that you can contribute per calendar year. Now, what makes the Roth IRA so valuable is that the money grows tax-free. 401k, you are contributing post-tax dollars. That means you have already been taxed on the dollars that you are contributing to that account. With the 401k, that money is contributed pre-tax. So you're taxed on the 401k when you pull that money out. With the Roth, you are taxed when you contribute it, and then when you pull that money out, you are not taxed. Now, a brokerage account has none of the income rules, none of the contribution rules, but it doesn't have any of the tax benefits of the 2 previous accounts. Think of your brokerage account sort of like a checking account, but instead of holding the money, it's the vehicle that you use to invest your money. Once you decide what account is best for you, now it's time to decide what platform we'll be using for our investments. Choosing your platform is about personal preference. I personally like Fidelity for beginners, but there's also Charles Schwab, Robinhood, Vanguard, M1 Finance. The best platform for you is the one that you'll actually use. You don't need a perfect platform, you just need to choose one. I started my investing journey with Robinhood. I currently use Fidelity and M1. Once you choose your platform, you'll need to fund it, and then you're ready to start investing. Now, I rarely hear people talk about how investing for wealth is boring. When we think about investing, we often imagine these guys in this room with all of these monitors. In my opinion, and maybe this is a hot take, day trading feels a lot like gambling. That's not what we're doing here. When you're investing for wealth, it is a slow, steady, boring game. I recommend starting with low-cost index funds. I think that is the easiest, lowest barrier for entry and has the least amount of risk for an investor, especially a new investor. Now, what's an index fund? I want you to think of the stock market like a restaurant. You go to the restaurant and you can choose one entree, which is a single stock, or you can choose a sample platter, which is an index fund. If you get the single entree and it's not good, your whole meal is ruined. But if you get the sample platter and you don't like this one thing, you've got a couple other things to choose from. Purchasing an index fund allows you to diversify your risk versus purchasing a single stock. If you buy a single stock of Tesla and Tesla starts to go under, you've lost your money. But if you've bought an index fund that represents the entire S&P, your options are diversified. An index fund is like a group project where the smartest kids did the work, but we all get the A. This is not investing advice, but these are some of the index funds that have done really well for me. Now here's your completely unsexy investment strategy. Pick your index funds, Automate your contributions and then leave it alone. No daily checking, no responding to the headlines, just set it and forget it. The stock market is cyclical. It'll go up, it'll come down. And if you're constantly checking your investments or worried about losing your money, you will drive yourself crazy. Time in the market will always beat timing the market. Historically, what goes up must come down. What goes down will come back up. You don't need to watch your investments grow. You just need to give them the time they need to grow. Now, if you want to take this further, I recommend The Simple Path to Wealth by J.L. Collins. This is a classic investment book. It's what I pull out anytime I have questions, and it's what got me started with investing. I'll link it down here in the TikTok shop. Highly recommend it. I have read this book over and over again, recommended it a dozen times. I'm Saprina, and I talk all things money.